Hello, dear traders. Our analysts are ready to share a recap of the Fed's policy update and the basic remarks of Jerome Powell. The highly anticipated event for financial markets took place yesterday. The US Fed came up with a policy update as expected. The official funds rate was raised by 0.25% in line with the expectations. And besides, Jerome Powell stated that the US economy is healthy enough to tolerate monetary policy. Wall Street cheered up such policy decisions and the stock market perked up in response. The major US stock indexes closed yesterday with gains. The overall trajectory reversed immediately after the policy announcements. The Dow Jones closed with a 1.55% rise, the Nasdaq jumped by 3.77%, and the S&P500 closed 95 points up, having gained 2.24%. Such optimism is explained by the fact that the US Fed did not venture into the serious tightening, so Wall Street came down because the central bank assured investors of healthy economic conditions. According to the policy statement, 6 more rate hikes are on the Fed's agenda this year, so that the key interest rate will be increased to 1.7 or 2% by the end of the year. Apart from that, the central bank upgraded its inflation forecast to 4.3% for 2022 from 2.6% in the previous forecast presented in December. GDP was downgraded to 2.8% for the whole 2022 from 4% in the early forecast. Though inflation expectations took too cautious and the GDP projections look too optimistic, markets expected worse. By the large, amid the relatively stable geopolitical situation, the S&P500 is likely to test 4,355 points. The US dollar gave a muted response to slightly hawkish rhetoric from the Federal Reserve. After an early decline, the US dollar index remained flat at around 98.40. This behavior could be explained by a rapid retracement in the stock market and some signs of a progress in the Russia-Ukraine talks. Nevertheless, any escalation of the conflict could revive the bullish momentum of the greenback until the parties reach a peaceful solution. Market sentiment depends on global risks and the slowdown in the global economic recovery. For the time being, the Federal Reserve assesses macroeconomic metrics pragmatically without any panic. A weekly update from the US Labor Department was better than expected today. The number of initial unemployment claims came in at 240,000 last week, lower than the expected 220,000. The previous indicator was 229,000. In a separate report, the number of building permits fell in February from January, but was also higher than in the forecast. The indicator was reported at 1.859 million. In light of the deficit matrix, the US dollar index is going to trade in the corridor between 98.10 and 98.70. The USD CAD pair moved downwards following a decline in the US dollar index. The currency pair dipped to 1.2680, having escaped from a protracted range between 1.27 and 1.29. Hopes for diffusing geopolitical tensions and ceasefire prospects are bullish for the Canadian dollar. Analysts predict a further slide to 1.2615 today. However, uncertainty and instability remain in global financial markets. Any abrupt twist in the Russia-Ukraine talks can instantly change market sentiment. The USD CAD pair is expected to trade in a wide corridor between 1.2550 and 1.2800. Bitcoin closed yesterday at 40,853 after the Fed's rate hike. The flagship crypto gained 2.56% yesterday. At the same time, Bitcoin is still trading inside a tight range between $39,000 and $41,000 amid high volatility. Analysts foresee a new attempt to break previous highs or lows. The upward target is seen at 45,000. That matches the previous swing high. The swing low is spotted at $34,100. There is an actual change of either a jump or plunge. If there is no impulse, Bitcoin might get stuck between $38,000 and $42,000 today. And we've told you how the market responded to the Fed's policy decisions and the press conference of Jerome Powell. Wall Street investors are cautiously optimistic about the year's economic prospects and further monetary tightening. How long will optimism last? Time will tell, and we will keep you updated on important events and trends. See you tomorrow.